You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And with Buffett going in, and I think he bought Dominion Natural Gas or something for $10 billion just last week, I think it was. I mean, it's probably a pretty good sign for natural gas that I think it's pretty much undervalued, and there will be demand for it. There is demand for it.
This is Mining Stock Education, and I'm your host, Bill Powers. Thank you for tuning in. Well, in today's episode, we're going to be touching base with Chris Vermeulen of thetechnicaltraders.com. Chris does cover the gold sector as well as oil and natural gas and the general equities, and he approaches it more from the standpoint of a trader using technical analysis. So Chris, thank you for coming on Mining Stock Education again, and I'd like to start off with getting your thoughts on Warren Buffett. He was in the news recently that he's upping his natural gas holdings to where Berkshire Hathaway Energy will now carry 18% of all interstate natural gas transmission in the U.S., and that's up from 8% after his recent purchase. Is this a contrarian bullish sign for natural gas investors?
Yeah, I mean, we really hit, multi-year lows. I don't even know if it was all-time lows, but I mean, I actually talked with this and showed the long-term charts of natural gas to subscribers this morning, and when you look at the monthly chart of natural gas and zoom way out, every couple of years, every 3 years or so, there's a major cycle low where we've put in lower lows. And I mean, I think it's a pretty big turning point that we are probably at for natural gas. And we've been looking at the shorter term chart, the daily chart. The market, it looks like it's carving out a bottom. And with Buffett going in, and I think he bought Dominion Natural Gas or something for $10 billion just last week, I think it was. I mean, it's probably a pretty good sign for natural gas that I think it's pretty much undervalued, and there will be demand for it. There is demand for it, but I think what's happening in the economy now with the shutdowns, I think it's going to put a ton of operations out of business. And that alone is going to keep the ones that can stay in business as the key players. So I think it's really important. I think we're near a turning point for natural gas. Long term, I think we're going higher.
So how do you trade this? Do you use an ETF, or you mentioned making sure that some companies stay in business? So if someone's going to go for a particular play, they obviously have to do fundamental analysis in addition to technical analysis?
Yeah, natural gas is a really tough one. I mean, there are ETFs to track natural gas, but the way they're built is terrible. They're almost like an option. Just over time, they lose value because they're constantly rolling to the new front month. And so you have natural gas, even if it puts a bottom in, but it bases here and holds its value or even goes up 3% a month, the ETF will actually be trading sideways or down because there's quite a bit of erosion every month on the natural gas ETFs, like anywhere from 1 to like 6 or 9% some months, depending. So it's a tough way to play it. I think if you were to get into natural gas, you've got to go out, cherry pick a strong fundamental company that's got the resources to get it out of the ground super cheap. They've got the connections, the network, the clientele that they can stick around and they can survive what's going on. And as long as you can hold out longer than the majority of the other companies in the sector, they'll go to the wayside. You'll become the rising star, and you should do really well. So I think an equity play would probably be the best way to play natural gas, because this is a long-term investing kind of major low. ETFs for natural gas are for short-term trading, not kind of buy and hold.
Chris, you focus on swing trading. That's one type of trade that you engage in. I've heard you say in the junior resource sector, people do the Sprott watch, and they do the Sprott trade. When Sprott invests, Eric Sprott that is, invests in a junior, you'll often see that rise significantly, especially in the type of environment we're now in. With Warren Buffett, won't we see the same type of thing in natural gas now? And I mean, are you going to play that just as a swing trade possibly?
Yeah, there could be a good play. I mean, we saw natural gas. I'm not exactly sure when Warren Buffett did that purchase, but we saw natural gas go from $1.43 all the way up to $1.86, a huge jump in the last 6 trading sessions. And that's probably because he jumped in and is bottom picking and picking a company and committing to natural gas. So definitely people are following his coattails. I think that's probably what has sparked so much interest and volume in natural gas in the last week. So I'm interested to play it. I've talked with subscribers. Really, the high that natural gas hit today, which is Monday, July the 6th, is a really significant resistance level. It's pulled back quickly from that level this morning, but this is an important level for a base to be formed. If it can break that kind of 186, 190 level on the continuous contract, then I think we're off to the races for a base being put in, and it could continue to extend substantially higher.
What type of oil trades are you making right now?
We are not trading oil right now. To me, the chart, it's been on a very strong run. It's a high momentum play is what it looks like. Just a lot of people have piled in. When oil went negative, that I think drew in so much attention that we've got a lot of short-term kind of momentum traders in there. And oil has been moving a lot like a small cap momentum stock, where late April and all of May and even part of June, we just kept seeing it go higher, higher, higher. And it would only pause for a day or so and then keep on moving. We haven't had any real corrections, but late June, we started to see some bouts of selling take place after a major resistance level was hit from a big gap on the chart back in on March 6th, and that level was hit and we saw some big selling come in. So the momentum on oil, it's made that move. It's made a gap fill on the chart. Gaps tend to get filled, and it's now starting to look like it's losing some momentum and forming somewhat of a topping formation. It has not topped or started to move lower yet, but it looks a lot like a topping pattern, and it looks ready to roll over and pull back. And especially with what's going on with COVID and earnings just about to come out, this is probably going to be one of the worst earnings seasons expected. I think it's going to shock a lot of people. And of course, if COVID rears its ugly head again, it's going to kill oil, and oil could deflate very quickly down to around 28. It's currently at 41. So there's some pretty good downside. If oil loses its momentum here, there's going to be a lot of those short-term traders getting out, hitting the sell button, and it's going to create a waterfall type sell-off, a big red bar on the chart.
Do you trade in the uranium sector at all?
I don't, no. I haven't followed it really.
What about any other commodities besides the precious metals that you might be focusing on right now?
Precious metals have really got most of my attention. They seem to be setting up. Gold's been in a bull market since last July, and we've got miners, large cap miners have broken into a bull market. The juniors are on the cusp of breaking into a bull market. And when you go down to the micro gold miners, the penny stocks, more or less, they're raging. Everyone seems to be kind of moving into those plays, and they're on fire compared to the larger caps in terms of where they are. But it's just precious metals has my core attention because it's a sector that I know, it's a sector that I believe in is going to do very well with what's going on with all the fiscal stimulus and issues globally around the world. I think metals are going to continue to climb, and it's going to definitely benefit the gold miners. So I haven't really looked in other places. You can look at the TAN ETF, which are, you look at the solar stocks, they've had a strong rally and move up. But really, to me, it's the miners are kind of front and center because I'm comfortable trading those and investing in those because I think we're at the cusp, of another major bull market for that sector. So
then that would be a buy and hold over multi-years, potentially recommendation to your subs in the precious metals? Yeah. So I definitely bullish on gold is already in a bull market. Silver is $1 away from breaking into a full-fledged bull market. And if that happens, which is a break more or less of $21 an ounce on silver, it should start to rocket higher. And of course, that's going to unleash the fury. I think we're going to see gold miners, take off as well. I think everything will start to go. Everything's just been kind of capped and held under a level, but I think we're on the verge of them breaking and running to the upside where they don't look back for a long time. We'll be right back after this word from our sponsor. Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. So your technical analysis then would be beneficial to people looking for entry points into a precious metals gold bull market then? Would that be the most value you would give to your subscribers if this is a multi-year bull market?
Yeah, I carry two different subscriptions. One is for investors, what to do with our money for long-term positions where you pretty much set it and forget it. You buy an ETF on the index or metals or bonds or potentially an inverse ETF on the stock market if we go into a bear market. Really simple stuff. Trades last years. It's just about being on the right side of trading with the bull or the bear. Investors, that's the core signal is you're looking for the next bull market in stocks or the next bear market, how to be positioned for that, and then also what to do with precious metals. When do you get into gold, which was last year? When do you get into gold miners? Seems to be this year, kind of right now. And then when do you get into silver? Silver's darn close to breaking into one. It's not there yet, but I mean, once we have that signal, it should be off to the races like 2010, where, it goes from $17 an ounce to $48. I think it could be a very explosive move, and it could repeat that type of price action again.
Chris, you know the gold sector very well and the gold equities, but you also know how to make money in a bear market. I've heard you say that stocks fall 7 times faster in a bear market than they rise in a bull market. So my question for you is, when someone like myself and a lot of the listeners that are listening to us right now get excited about a gold bull market, do you get excited about a gold bull market more or less than you would about a bear market that you've discerned?
I'm equally excited about both. I think there's, I really do like a falling market. It doesn't have to be a bear market. I mean, it just needs to be a downtrend because the market, it really collapses. If you were to go and count on, say, the SP 500, you count 5 or 10 or 15 days out, and you just keep counting until you get to the first red bar, and usually you'll see 7 days or so wiped out in 1 or 2 days to the downside. And I mean, we saw a rally for several months, very strong rally in the equities market. And in only 5 trading sessions, it wiped out 6 months of gains in 5 days, and that happens quite often. So there's a lot of downside if you can catch it. Now, when you're in a bull market, you really don't want to short stocks because it's usually that one sharp drop, and then the market just trades sideways and chops sideways for a few weeks. The way to play it in a bull market is when you see the market starting to roll over or it does have that collapse, you move out of the equities and you go into bonds, and bonds actually will trade higher while the stock market just trade sideways. And that's been the way to play it since really 2009, mid 2009 till now. And right now we're at this tipping point where the stock market is on the verge of starting a new bull market. It's also on the verge of starting a bear market. And so it's a really mixed signal what's going on. And I think if we do get another bout of selling, there's going to be an opportunity to short stocks, because once you are in a bear market, you don't really want to buy bonds. You actually want to buy an inverse ETF because the market falls exceptionally fast and you want to catch those drops. So if we do get a confirmed bear market here over the next several weeks, we'll be looking to short the market. And then when we have captured most of those gains, we step out of the market and we just go to cash, and or potentially you move actually into metals or wherever the safe haven is. So in a bear market, you got to find the hot pockets. I have a feeling it'll be metals and miners. So once you get out of those shorts, you can move into miners, and they should bounce and rally with the stock market and outperform it dramatically. And you can kind of keep oscillating between shorting stocks and then moving into the high beta safe havens like metals and miners for a big rally, because there is that concern that miners will pull back when the stock market starts to crash, and it pretty much always does. Maybe they won't crash, but they'll at least trade sideways or slightly lower. So as a short-term trader, you're kind of moving from the core asset and then moving to the safe haven, back and forth between those two. So I like the opportunity, the upside of gold miners going forward, but I definitely also like the opportunity that if this market does go to crash, I mean, there's going to be huge opportunity to profit from a collapsing market. And it's kind of, once we are into a bear market, it's a fairly easy trade to do, as long as you know when to get in and when to get out, and which ETFs to play.
In this environment that we're in currently, which is unprecedented, where the governments are mandating the economy and small businesses to shut down, even in the States here, we're not even sure if what schools are going to open. I mean, it's a different scenario we're seeing. So when you're looking for those signals and you're trying to discern whether you're going to get a bear or a bull signal in the general equities, are you focusing more on the headlines or the technical aspects of how you look at charts?
Right. Yeah. I look at the headlines. I mean, you can't help but read them now, because there's just every day and every weekend, there's extreme news, extreme events happening, whether it's in the United States, Canada, overseas. I mean, the headlines are hard not to want to look at it and skim through, but I'm strictly technical analysis. What I look for when you have a bull market starting or a bear market starting, it's a process. It doesn't happen quickly. It happens over several months, usually 4 to 8 months it takes for a major topping phase to unfold. You could argue here that we're only, we're only 6 months into this, potentially, maybe 4, depending on where you consider it may have started. So we still have a few more months, several weeks to let this market digest this. You could say it's a V-shaped recovery. You could say it's a bear market bounce. Who knows? We don't know yet. So we really just need to stick with the market, let it start to settle itself out here. And if it does start to collapse and slide again in the market internals, so how many stocks are trading above the 200-day moving average? If that really continues to collapse, if earnings are really bad, I mean, all those things are just supportive. They're not going to tell us when to trade. We want to follow the price trend. But if those things support what is actually happening on the chart, that means we're going to have very dramatic downside move, because everyone's going to see this actually starting to unfold, and they're going to start to sell their positions. But right now, people are still feeling really bullish, and they're buying every dip. But when the mentality starts to change and people are like, oh no, this actually may be the start of a double dip or a potential bear market in equities, when they start to get scared, that's when the market's going to start to fall. And I don't think the Fed's going to be able to save it. I think they're going to try dumping more money into the market, do more stimulus plans. I think they're going to create some very strong bounces and rallies, but I don't think they're going to be able to change the tide once the masses are in bear market kind of mindset that they should be liquidating and stuff. So it's going to be really interesting. I mean, this is unprecedented times, what's going on. The markets are not free anymore. I mean, they are being manipulated and driven by the Fed, just trying to keep the game going. And we just have to see if they can continue to hold the market up, or if there's going to be too many sellers eventually kicking in that are going to, like institutions, big fund money that say, hey, this makes absolute no sense. When the big funds start to unload, that's when there's going to be serious pressure on the markets, and we'll know if the Fed can hold up that kind of pressure or not.
Chris, before you go, I'd like you to comment and share your thoughts on cryptocurrencies and Bitcoin. Do you view these as a safe haven, and how do you analyze whether you should put some money here?
Yeah, I am definitely not an expert in cryptocurrencies, but when you look at Bitcoin, for example, it has moved a lot like gold and bonds this year, where really from March low, we've seen them rally up, and we've been seeing Bitcoin, gold, and bonds trade sideways for the last couple of months in a very strong bull flag formation. So obviously there is a flight to Bitcoin, and it's holding up exceptionally well. I have a feeling when there is some selling in the market, fear in the equities market, and people don't know what to do, I think we could see Bitcoin really pick up traction and take off. When you look at the technicals on this chart, the upside target based on this current pattern here is around 13,800, 13,900 somewhere range, which happens to be the high that we saw in June 26th of last year. So it's trading at 9,300 right now. So we're looking at a pretty significant move, a $4,000 move in Bitcoin and a bit more than that. And, it's a different type of asset class. So I think we could see money flock there as a safe haven play. I mean, what's going on with the stimulus and the printing? I mean, it's got to hurt the dollar over time. And so people I think are going to migrate away from the dollar and into some other type of currency, which, Bitcoin is considered more or less a currency.
You've been listening to Chris Vermeulen of thetechnicaltraders.com. If you're not familiar with his work or the articles that he publishes, I'd encourage you to go over again to thetechnicaltraders.com. Chris, thanks for coming on today's show and sharing your insights.
Hey, thanks for having me, Bill.